Yo, traders, what's up and what's going on? Frank, Wesley. Let me go ahead and get the live stream over on TikTok going, and we'll spend 30 to 45 minutes really reviewing our day, and I'm here to assist you guys. That's why I'm doing these streams in the first place. I'm here to assist you. I'm here to help you. If you had a green day and you want some critiquement on your trades, on your good trades, we can look at them and see where you went right. If you had some bad trades, we can look at your bad trades and see where you went wrong to where you can improve for the next time. So these sessions are really like open floor Q&A sessions where I'm here to support you guys. I'm here to build you guys up and do everything I can to help you become more successful in the stock market. So what's up, Frank, Wesley, Dita, Joel? Hello and good evening. Yeah, it's like Tuesday evening. I'm usually in bed right now, guys. No joke. I'm usually in bed right now. So let's go ahead and get the stream going on TikTok, and maybe we can drive some more traffic on over. But in the meantime, I'm all yours. Shoot away. Ask away. Any questions until we're officially ready to go. We're about 13 minutes early, and this is the first day doing it, so it's a little choppy. I'm not in the zone. I haven't done this before. I got to get my routine going, so it's going to be a little funky the first couple of days we do it, but the more that we do it, the more that we get rocking and rolling, like morning sessions. Where's it? Frank says, where's the intro? Frank wants the intro. I can rock the intro. I'll rock the intro, guys. Absolutely. I'm more than happy to rock the intro. Let's do it. Let's go ahead and try and get some more traffic on over, and we'll get some hype with the intro. How about we play some music in the meantime? I don't know if you guys like my taste in music, but it is what it is. Yo, I bought Zoom before the close. Oof. I still think we have a little bit more time to the downside. Just a little bit. Like maybe 275 on Zoom. But we'll see. We'll definitely see. I expect to see a couple days of consolidation on Zoom before we really start to see it pick on up. Alright. Do we have any good music? Do we have any song requests, guys? Any song requests? Go ahead and get something going. Kind of get that the energy. Kind of start getting the flow. Yeah, you like the intro? You guys will like this. Somewhere far away, I talking to the moon and through the window in my room. There's not much I love to say, and I don't have the strength to fight. I feel good inside, like I've been buried in the grave, and you stepped in my soul the night you stepped away. Oh, here's to you. I down a couple more to drown the pain. No, I'm not alright. I'm not gonna lie. I give up my life to have you in my life. Maybe in and out of life, it'd be just you and I never stopped loving you. I want you back. You back. I want you back. I want you back. I know you're somewhere out there. evening, traders. What is up? What's going on? Welcome to the very first evening live session. So I decided to put these sessions together a couple weeks ago because I realized not everybody can tune in the morning and tune in for the entire session. 8 o'clock on TikTok, 9 o'clock on YouTube, running it until about 10 o'clock on YouTube for free. So I realized not a lot of people can really join and tune in the morning. So I want to start doing these periodically during the week. In the evenings, I guess recapping our day, recapping the market, and seeing what we have in store for tomorrow. But honestly, more of like a Q&A, right? You know, we can definitely structure some lessons in these sessions. Again, this is the first day. It's going to be rough, guys. Let's be honest. It's going to be rough. I have no preparation and no structure whatsoever. My structure in the morning, I've been doing it for the last 3 years, right? This is my first time doing an evening session. I have no idea where we're going with this. So as we grow, as this builds, we'll get more, structure as far as how we're going to do these. Bring on guest speakers. Again, make this more of a really awesome event, guys. So to start, I would say let's go ahead and open up the floor with a Q&A session, guys. Right? If you have any stocks that you took today that you lost on and you want a review and me to critique it and see where it went wrong, we can do that. Right? We can absolutely do that. If you, hey, what's BBIG look like for tomorrow? Let's dive into the technicals. Let's go ahead and start the first, the segment of our session with a little bit of an open floor Q&A session, guys. YouTube, Alpha Day Trading over on YouTube. So again, you can actually click the link in my bio and you'll see the YouTube link that'll put you right to the channel. And then you'll see the live stream that's currently going on. Right now we have 9 viewers. So Frank, Wesley, Dita, Joel, Tyler, what's up? Good evening, Tyler. Frank got his intro. Joel, you're the best. Made $640 freaking dollars on RHE. That's what I'm talking about. Good job, Joel, making $640 on RHE this morning. RHE, not bad, not bad, not bad at all. What was I can't remember, guys. We had called out so many stocks today. So many plays. BBIG for the market structure above 6. BBIG loses $6 momentarily, gets back up, 5-minute market structure, never looks back, never drops below 6. Stops were right under $6. You're risking like 15 cents on BBIG. This stock, again, we knew it had room to 8. From 6 to 8, that's what we were looking at. So BBIG, we absolutely nailed that. We nailed CRM today. And CRM was something I was watching a couple days ago. So I noticed the gap up. I noticed it starting to sell off. So I said, you know what? If this stock continues to pull back, and it hits the gap and it fills the gap, I'd expect to see a bounce. The gap was down there around 262.40. This morning we came down to 262.73. I picked up 5 contracts for Friday's expiration. I made 50% in less than 20 minutes on CRM. And gaps like to be filled, guys. I mean, Microsoft, MSFT. Same thing yesterday. Not yesterday. It was actually Friday. It was actually on Friday. Stock gaps up, pulls back, fills the gap, bounces, multi-day bounce. CRM, same exact thing, right? Gap up, pulling back, filling the gap, a little bit of a bounce. We took it right at the start of the day, 50%. So not bad at all. So that was a good trade. Yo, Bryant, what's up? What's up? What's up? Appreciate your knowledge. Well, I appreciate you being here. I appreciate you joining the stream and tuning in and taking the initiative to be here in the first place. So again, guys, we're really focused on YouTube right now. So again, Alpha Day Trading over on YouTube. Go ahead and come on over. We got charts, commentary. We're going to have some fun, guys. We're going to have some fun. It's a nice little Q&A session. So again, I'm really focused on the comments that are coming into YouTube. So again, if I miss your comments here, it's not that I'm completely avoiding you. I'm just focused on what we have going on YouTube. So again, come on over to YouTube, guys. Do you think BBIG can hit $10 by the end of the week? You know, the fact that it's set up the way we wanted to see BBIG set up today was, again, staying above 6. Now, it dropped below 6 momentarily, but what did I say when it dropped below 6? If it regains 6 and it puts in the market structure, it's still a good trade. If it regains $6 and it puts in a W, a double bottom, it's still a good trade. What did it do? Regain 6, boop, boop. Confirmation and reversal from around 625 to 680. Never dipped back below 6 today, and then all the way up towards around right now 820. So yeah, I do think BBIG has potential to hit 10. I honestly think it has potential to exceed 10. $8 is our new level of support. We really want to see BBIG staying above $8. Your next target on BBIG is $9.50 and then $10. Anything over 10, you're looking at $10.59, $11.14, and then $11.63 all-time highs. Now, depending on how much volume is behind this and how much hype is behind BBIG, the sky's the limit over all-time highs. The sky's the limit, $15, $20, anything can happen. There's a lot of hype around BBIG right now. A lot of hype around BBIG because it's going to be the next short squeeze, right? That's what everybody's saying. So there's just a lot of hype around it, thinking it's going to be the next SPRT. So as long as BBIG has the hype and it's the talk of the town, we're going to see some action here on BBIG. Tom in chat, what's up? What's up? BBIG 1530 till end of market. Kept thinking breakouts were occurring. Fooled me more than twice. What would be my confirmations? So BBIG 1530. So 30 minutes before the end of the day, until the end of the market, kept thinking breakouts were occurring. Breakout, breakout, breakout. What would be the confirmation? Waiting for the first candle to close over resistance time. Right? So when you see a breakout, you don't want to get caught up in false breakouts, false breakouts, false breakouts, false breakouts, false breakouts, false breakout, right? In order to properly trade a breakout, you need to wait for the candle to actually close over a level of resistance, right? So if you were looking at BBIG and you saw a resistance right there at 680, right? If this stock would have came up, right? You could have chased the breakout. Let's say the stock broke 680. Oh, it's ripping, it's running, and you're in 694. What if that would have closed back below 680? It's not technically a breakout because it didn't close above that level of resistance. It hasn't technically broken out. So how do you wait for confirmation? What would be your confirmations for a breakout? Is the candle actually closing over that level of resistance on heavy buying volume, right? So not just the candle closing over resistance, right? But occurring on high buying volume as well. That's going to be your confirmation that it's a proper breakout, it's a strong breakout, and you can continue to see it run to the upside. What happened with BBIG? It pulled back, retested the breakout level, that level of resistance, and then shot straight to the upside. So again, waiting for volume confirmation and a candle close over that level of resistance. Tyler, when a stock squeezes like SPRT or BBIG, is it done? My thought is a lemon only has so much juice. You're absolutely right. 100%. A stock only has so much juice. A stock can technically go up indefinitely forever, forever, and forever, right? There's no limit on how high a stock could go. But eventually, the stock is going to start seeing more sellers move in as people take profit, and then it starts pulling back. And when the stock starts pulling back, traders may panic, right? The traders that were buying high and the smart traders that were buying low, selling high, right? They're starting to sell, which is a healthy pullback, but the traders that were buying high, they're starting to panic and they start closing, and then the stock ends up pulling back. So yeah, the sky is the limit. A stock could technically go as high as it wants, but eventually the stock's going to come back down to reality, like what we saw with SPRT. The stock went from $10 and hit $60, right? Eventually, you're going to have profit taking. Eventually, you're going to have people walking away from this trade because, again, it went from $10 to 60 freaking bucks. 600% in less than a week, right? There's going to be profit taking. And when you see big, nasty red days and a lot of profit taking, that's normally when the stock's done, right? Because traders lose interest. That's it. It's just traders losing interest. The stock just went from 10 to 60. It went from 60 and it pulled back all the way down to 30. Right? If it doesn't start moving back up soon, SPRT is going to be one of those stocks that just loses a lot of interest and activity, and we're not going to see that kind of hype behind SPRT, right? And SPRT looks just, right now, there's not a lot of opportunity with SPRT. Now, if you look at it, you have nice increasing volume along the push, and the last 3 days, it's been, selling off on less and less and less selling volume, so that's telling me that sellers are slowly becoming depleted, and it didn't come all the way back down to 10. It's actually still holding up, right? It's actually still holding up pretty well. It didn't just completely dump all the way back down. And we see over the last 3 days, less and less and less selling volume. So that tells me that sellers are being depleted and buyers could move back in to SPRT. Not saying it's going to happen, but I'm saying that if we start to see some buying activity and we start to see heavy buying volume, SPRT may not be done, right? Because we see sellers slowly being depleted right now over the last couple of days on SPRT. And it's holding its gains relatively well, still holding above 30 bucks. So with that being said, SPRT is still on watch, but eventually it will become dead, Tyler, right? Eventually it will be done. Like, how many stocks have we seen rip 1,000% in the past? Week, 2 weeks, 3 weeks, ripping and running. And then we go back and look at those stocks today, they're hitting 52-week lows, right? It happens a lot. You see stocks, they have the initial hype, they hold on to that hype, they have a lot of momentum, a lot of buying pressure, a lot of activity behind it, but eventually the stock will become less hyped up. The stock starts pulling back because you have profit taking, and eventually traders lose interest. And when traders lose interest, the stock just fades and falls, right? Until it has another credible reason to start moving again. Can you look at TKAT from Lewis? Lewis was next. So TKAT to cat. TKAT. So we were watching TKAT last week, and I wasn't a fan those couple of days. It did break out momentarily, but it kept closing below the 200-day moving average. And the 200-day moving average is a strong level of support and resistance. One of the strongest moving averages that traders respect for a level of support and resistance. So looking at TKAT, it still has yet to close above, right? It still has yet to close above that level, right? It tried on the 25th, it failed. It tried on the 26th, it failed. It gapped up. Wow, it actually gapped up above the 200-day, and it failed. It closed below. And then you see it today, once again, trying to re-break that 200 SMA, and it's getting rejected. I would not touch TKAT until it actually closes above the 200 SMA. And right now, the 200 SMA is right there around 1186. And the reason I wouldn't touch it is because look at how many times that it's tried to break the 200 SMA. 1, 2, 3, 4 different times, and it keeps getting rejected. Keeps getting rejected. So that tells me that tomorrow, if it opens up and it squeezes slightly over 12, it may get rejected because it's been rejected the last 4 trading days, 5 trading days. Until it actually closes above the 200 SMA, I think that we're still probably going to get held down by 12 bucks. Right? Until we actually see the stock breaking and closing over the 200 SMA, I don't think it's really going to start taking on off. Now, if it does break and close over that 200 SMA, right around 12 bucks, then we have a lot of opportunity to the upside. We can see it back up towards around 14.55. We could see it up towards around 17.38. We could see it all the way to 20 and over 20 into the 24. So yeah, TKAT definitely has a lot of opportunity to the upside. However, we have to wait for this stock to actually prove itself and get that break, hold, and close over resistance. And until that happens, I would not be touching this as a swing trade. I may be day trading it if there's a day trade opportunity on TKAT. But it's still on the watch list, guys. It is still on the watch list on TKAT. I had someone tell me that BBIG will be partnering with a crypto company. Can you confirm that? Yeah, we can go ahead and look real quick. Maybe some news on BBIG. I haven't heard that. A lot of sweeps on BBIG, a lot of sweeps, a lot of sweeps, a lot of sweeps. You know, that was definitely something that, you know, really helped this out. Reddit traders strike again, go big on Vinco Ventures. Vinco Ventures. I saw something in regards to this. I don't think it was in regards to crypto, but let me confirm that for you real quick. TikTok, right? Isn't Vinco Ventures, like BBIG, going to be the competitor with TikTok, if I'm not mistaken? I think that's what it was. They're going to be the runner-up to TikTok, right? They're going to be TikTok's competitor, if I'm not mistaken on that. So, if I'm not mistaken, and I remember correctly, that they are trying to become like, you know, TikTok. You know, TikTok's competition on BBIG. Let's go ahead and look at their profile real quick. I'm still looking, guys. I just want to make sure that I give you the right information here. But again, I'm going to go verify that. I saved the video. But again, if I'm not mistaken, they are basically trying to be the runner-up to TikTok. So I will continue, Bryant, I will continue to look into that for you. Again, you do tune into the streams in the morning and on TikTok, and we're going to be doing these in the evening. So I'll make that a priority to do some more research into a possible partnership with a crypto company and see if that is something that's currently circulating, something that's out there. I made $445 with BBIG today. I sold early at $670. I could have made over $3,000 in profit, but hey, profit is profit. Absolutely. Profit's profit. $445 is better than breaking even, better than losing money. It could have been $3,000, but you still secured $445. You do that consistently every single day, you're making over $100,000 a year. So that's good money in one day. In what? An hour? 2 hours maybe? Right? Good setup, low risk, great reward. Absolutely amazing. Joe, XPEL. Oh, 5 hours. Yo, so yesterday, what stock was it yesterday? It was GSAT. Guys, you know me. I like to get in and out. 2 minutes, 5 minutes, 10 minutes. In and out of my trades. In and out of my trades. GSAT yesterday was a 3-hour-long trade. One of the longest trades I've ever been in, I think. Like, obviously, besides a swing trade or like an option, but like a penny stock? Right? Like physical, like 3-4 hours. I was like, what the crap? Like, it was a long trade. And it was a pretty good, profitable trade as well. So, but yeah, 3 hours is a long time. 5 hours is a long time. But if you break that down, you're making about $80 an hour. And for 5 hours, you just sat here. Right? 5 hours, you sat here and you just saw your profits grow and grow and grow and grow off a really nice setup that we were talking about this morning. So I'm very happy to hear that some traders were actually capitalizing on BBIG once it regained 6. Put in that market structure, and then started ripping to the upside, guys. XPEL. Absolutely. I got XPEL. And then Tom asking what are sweeps, and we'll definitely talk about that as well. So XPEL. Again, so you guys know, I'm a technical trader. I do not look into fundamentals whatsoever. I trade the chart. I trade the technicals. All right? So again, if you're looking at like long-term investing, what do you know about the company? What's their PE ratio? What's on their balance sheet? Can they make it through a recession? I don't know. I don't really look into the fundamentals, right? I'm a technical trader. But, you know, if we just go ahead and look at the technicals here on XPEL, the first thing that I see is the stock is uptrending really nice, and it's in a really aggressive, steep downtrend. So the first thing I would do is grab a downtrend and run it off these highs. We can see here that, you know, we had a downtrend, breaking the downtrend, right? We're slowly consolidating now. So, I mean, that would be the first thing I would try and just be mindful of is the downtrend there. But it's nothing too solid. It's nothing too crazy. If it was a really good downtrend break, you'd see a nice big pop in volume through that level. It kind of slowly just kind of grinded outside of the downtrend. So nothing too crazy there. So let's just go ahead and try and identify some levels of support and resistance, the overall trend, right? We see the stock was very oversold. We had some bearish divergence. Look at the RSI in correlation with this high here on the chart. Back in June, the stock was right around $93. The RSI was extremely overbought. The stock ripped to 103. We did not see the RSI follow price. So price is making higher highs. RSI was making lower highs. That was a sign of a possible reversal. What happened? We saw that divergence set in. It was very overextended, very overbought. Started selling on off. But again, it's been selling off since what? Since late July. So about a month. It's gone from 103 all the way back down to 70. So it's pulled back healthy. It's pulled back really, really nice from overbought to oversold. You see the bounce and you're getting slight consolidation. If you're looking at XPEL for like a swing trade, it's definitely not a bad idea to start scaling into this. I don't think it's a bad idea to start scaling in. Maybe if you had $1,000 you wanted to invest in this stock, start scaling at like 5-10%, right? 5 to 10%. And I would be placing stops underneath that low if you wanted to get involved. But honestly, if it were me, I would have it on my watch list and I would still probably sit back on the sidelines and wait to see it consolidate sideways just a little bit more and give it a chance to see if it does pull back and maybe double bottoms on the daily, maybe puts in a higher low, but at least to see it's going to continue to consolidate sideways and not just drop, right? So you can look at it two ways. You can sit on the sidelines and wait another, maybe this week and the next week and wait for the consolidation. But the thing is, you may miss on a move to the upside, right? You may miss a move to the upside by being patient, but by being patient, you may get better analysis on XPEL to really determine the type of size you want to take, where your entry is really going to be, where your stop loss is. It gives you a little bit more time to really thoroughly wait for the stock to really set up a little bit better than what it is. But you have that chance of the stock starting to move without you and you miss out. So if you don't want to miss out and you still want to get involved with XPEL, it's definitely not a bad time, in my opinion, to start scaling in. I would not go 100% in. I wouldn't go 50% or 25% in. I would literally maybe like 5 to 10%, right? Make a small 5 to 10% entry and put those stops under 70. Actually, under 68.42. So maybe like a 68 stop on the trade, but you're only putting like 5 to 10% of what you want to invest in it. Again, if you're looking at a swing trade, and as it consolidates, if it starts seeing that volume, you start seeing it break $80, it's breaking back above the 20 EMA, it's breaking out of that consolidation, start averaging a little bit more, be a little bit more aggressive, bring your stops up, average in, bring stops up, and slowly scale and trim when you're in the profit on XPEL. But overall, I do like the fact that it was high, right? It was at 103, it was overbought, it's dropped over the last month, right? Pretty nice, right? That's a pretty nice pullback. You're talking, $33 pullback into a key level of prior resistance, new support. Why did it bounce right there at 68? Well, we had prior resistance and we had a prior breakout zone right around 68. So that's why it came down and bounced to 68. And we're oversold as well. So, it meets my criteria for a swing trade. Overbought to oversold, right? Hitting a level of support. Now we just got to get that period of consolidation. I would like to see a little bit more consolidation here on XPEL. And that's when I would start building a position, looking for the stock to get back up to $100 and retest those highs. What are cash sweeps? So call sweeps and put sweeps. So it's an order type. To really make this simple, it's a type of options orders. You can limit order into an option. You can market order into an option, or you can sweep to fill. It's called a sweep to fill order. So basically, if you have a big size, right? Let's say you want to buy 1,000 contracts. Well, you may not be able to do so. There may not be enough liquidity right then and there to get your fill of 1,000 contracts. Boom, filled 1,000 contracts. You may not, it may take time. It may take 20, 30, 40 minutes, an hour, and you're going to get filled little by little by little as more liquidity comes into the play. But if you're like, you know what? I don't want the best fill. I just want filled. Doesn't have to be the best fill. I just want filled right now. I want 1,000 contracts, whatever the case is. You can do a sweep to fill order. It's basically going to go to every single market maker, every single exchange, and it's going to sweep all of those orders to get you an immediate fill. So that's what a call sweep is. Basically, someone had such a big order and they wanted filled right now. They wanted filled right at this second. They're not concerned about the best price. They're concerned about just getting filled. They would execute a sweep to fill order, and that's when you see call sweeps. And that's when you see call or put sweeps. It's basically the order type to sweep those orders to get filled immediately. And it shows demand. It shows interest, right? If someone's willing to come in and drop 50K just to get in, that shows some demand, right? They're not going to sit there and 5 here, 10 there, another 5, another 10. They want filled right away. Why do they want filled right away? Right? You got to think about that. So again, sweeps are a good indication that there's some underlying demand in the stock. Because again, they came in with such a large amount of money, $50,000, $100,000, and they had such a large options order that they needed to get a sweep order going to get that immediate fill. And traders look at that as a bullish or a bearish sign, right? When you see call sweeps, traders get excited. It's going to rip and run, right? When you see put sweeps, oh my gosh, someone's going aggressive on the put side. Let's start shorting the crap. So again, it's just a good indication that there's some underlying interest in the stock to move in a certain direction based on the amount of contracts, the price of the sweep, the total investment, all of those things that you have to take into consideration. Good night from Germany. What is your number one rule as a trader? Don't FOMO? Well, I tell you what, my number one rule as a trader is to build trade plans each and every time. Each and every time. So, you know, I have a lot of rules, right? I have like 5 to 10 rules, guys, and I abide by them. But if I had to choose one rule out of the 5 or 10 that I have, what would be the number one rule? That I apply the 3 A's that I teach you guys. The 3 A's: analyze, assess, accept. I build proper trade plans to make sure that I'm not too aggressive on size and that I can manage my risk. 90% of your job as a trader is risk management. And how do you manage your risk appropriately? You build a trade plan. You know your entry. You know your stop loss. You know your target. Based on how much per share you're willing to lose, that's going to determine how many shares you can actually get on that stock to not exceed a certain dollar amount. So one rule that I would say that is the most important, my number one rule, is always building trade plans to make sure that I'm not taking too much size to where if I get stopped out, I'm not shocked. Oh my God, $2,000 a loss. I already see it coming. I already know what my loss is going to be because I built that plan. So that would be my number one rule. Build a freaking trade plan on each and every trade without fail. Because, you know, again, 90% of our job is risk management. And in order to manage our risk properly, we have to know what our risk is before we enter a trade. And how do we know what our risk is? We look at where we're looking to buy, where we're looking to go in, our entry, where our stop loss is, and then how many shares, right? And that's going to determine how much money you're going to lose. And that's how you manage your risk, by building proper trade plans. Tom, how do you see sweeps for a stock, calls or puts? So there's actually a website called callsorputs.com. You can go to callsorputs.com. You can sign up, and it will actually give you every single sweep for every single stock that's happening in the market. Or you may see it on a news streamer like TD Ameritrade. So like, for instance, you look at the news streamer here on TD Ameritrade, we had a lot of option alerts today. 1541, 1554, 1555, right before the close. You have a $7.50 call sweep. You have a $9 call sweep. You have a $20 call sweep. So someone came in and swept the October 15th strike or expiration, right? They came in and they swept the October 15th expiration at a $20 strike near the ask at $1.30, and they had 200 contracts. So how do you figure out what their investment is? Come in here and say, okay, 200 times $130 a contract. They invested $26,000. But now look at this one here. Look at the 750 call at the ask, right? Look at that 750 call at the ask. They bought 1,000, right? At $246 a piece times $246 a piece. That was a $246,000 investment. So someone came in and they wanted 1,000 contracts. They wanted to buy 1,000 contracts, October 15th expiration, $7.50. It cost them $246 a contract. They bought 1,000. That's a $246,000 investment right before the market closed. So there are individuals, there are traders, investors, whatever you want to call it, that think BBIG is going to continue the rip to the upside, right? September 17th, $9 call sweep. October 15th, $20 call sweep. So someone out there thinks that, BBIG could be over $20 come October 15th, right? That's still quite a bit of time. You're still talking 2 more months. 2 more months, about 45 days. So I still think BBIG has a lot of upside potential. Regardless of seeing the sweeps, I still think BBIG has a lot of potential just because it's the trend. It's the talk of the town. Everybody's talking about it being the next SPRT. It's going to go to the moon. Well, it held the technicals today. It held above 6. It had a nice little finish here in today. I still think BBIG has a lot of upside potential, guys. And we can see that kind of backing up our claim with a lot of these call sweeps just running through. So Joe, yes, absolutely. Tyler, the number one rule as a trader, building those trade plans. And that's something that we can talk about today. If you guys are like, I struggle with building trade plans. Like, I just don't even know how to start building a plan. We can go ahead and spend the next 10 minutes and talking about how I build my trade plans, right? And how I go about it. And maybe that helps you guys out. But again, if you're like, I know how to build trade plans, then that's maybe not a topic we talk about. So Oswald, BBIG is a good buy, even though their net income is negative. So that's a fundamental statement. I'm a technical trader, right? So I'm looking at technical analysis and psychology, trading psychology. Everybody's talking about BBIG, just like everybody was talking about SPRT a few weeks ago. And that's the talk of the town. That's the hype. That's the mindset, is BBIG to the moon, BBIG to the moon, right? That's what traders are thinking right now. Not professional traders, right? But unexperienced traders, traders that want to get rich quick, AMC, GameStop, they're just looking for an overnight, home run. Those traders are going to hype and run into BBIG regardless of the price. They'll be buying at the top, 15, 20, 30 bucks, right? So I'm a technical trader. So looking at technical analysis, I think BBIG has room to the upside. Thinking of psychology of traders, getting in the minds of other traders and how they're going to react, I still think there's a lot of FOMO behind this. I think there's still a lot of hype behind this. And based on all that, I still think that, BBIG has some upside potential. Again, the fundamentals may be crap. I'm not a fundamental trader. I don't look at fundamentals. I trade the technicals, and I really think of trading psychology as well. I do think Zoom will rebound. Absolutely. I like Zoom long term. I invest in Zoom long term. Guess what I did today after earnings? I bought more Zoom. What does Warren Buffett say, guys? When others are fearful, be greedy. It's a buying opportunity, guys. Zoom is a great company. Zoom is very innovative. Zoom provides a lot of value and a lot of solutions to problems, right? Zoom is a great company, and I like Zoom. I invest in Zoom. So I look at today, Zoom, gapping down 30 points. I look at that as a buying opportunity. And so I bought a little bit more Zoom. Next week, probably buy a little bit more. Next month, if it's still low, I'll probably buy a little bit more, because long term, I definitely think it's going to get back up to those highs, 100%. So yes, I don't know when, right? I can't time the market like it's going to happen next week. But I know long-term, Zoom will rebound, and I look at this as a good buying opportunity. All right, so that's how we're going to finish, right? So that's how we're going to finish. Again, today was like a little bit of a test day, right? Trying to kind of get some interest with these evening sessions, trying to figure out the time that works best for everybody. Is that 6 to 7, or is that 7 to 8? And trying to get more structure as far as we're going to spend the first 15 minutes reviewing the day, another 15 minutes doing a Q&A session, maybe 15-minute lesson, and really just trying to figure out the structure that works best for everybody. So let's go ahead and finish. Sorry, guys, I'm out of it today. I've been hard since 5 a.m., and I'm still here at 7 o'clock p.m. How was golf? Actually, it was good. I didn't play golf. I went to the driving range, and I just worked on my drive. I worked on chipping, and believe it or not, it was just one of those days to be by myself, without playing or feeling like I'm rushed or whatever. And I just went out there and I tried new techniques, right? New techniques that I've been, watching over the past couple weeks, like playing off your back foot, playing off your front foot, right in the middle, hands forward, blah, blah. And I just tried a lot of new things. And honestly, it was very productive. It was very beneficial. Like, I haven't hit such good shots as accurate in such a long time. Like, I would say out of the 70 balls that I had, I would say 50 of them were pretty damn good. Like, I just felt confident with the swing. I felt confident with where it landed, my targets. The other 20 were shit. Topping the ball, slicing it, skipping it across the ground. So a lot of them were shit, about 20. But the other 50 were actually like some pretty good hits. And I felt really good to make me feel pretty confident to get back out in the course with my father-in-law and smoke his ass for once. Yeah, he smokes me. He's like 60 years old, and he fucking crushes me in golf. And I feel bad. So I'm like, I got to get out here and practice. So next time I can show him up. I haven't parred yet. I haven't parred at all. And we play crappy courses. We play executive courses. So they're not challenging courses. And I can't par. He pars left and right. I'm fucking bogey, double bogey, triple bogey. Like, I got to work on my game. So that's what I did. I went out there and had some fun, and I worked on my game a little bit. Or what I'll do is I won't even tee off, right? I won't even tee off. I'll go right by the hole, put my tee in the ground, hit it in the fucking cup, and I get a one-stroke penalty, and I fucking birdie every time. So that's how I'll do it. I won't even tee off and play. I'll go right to the hole, right in the green, tee off from there, get a 1 to 2 stroke penalty, and I'll birdie every time. That's how you get a win. Yeah, the harder you try and hit it, the more you mess it. Yeah, and that's what I realized today. Is when I just focused on the form and one motion back, keeping my arms straight, hands in front of the ball, and I was really just focused on form and keeping my eye on the ball. The ball wasn't going far, but it was going where I wanted to go. It was going straight. I was getting some great air on a lot of my chipping shots, and it was just like, wasn't putting a lot of force behind it, but I was actually getting maybe 100, 150 yards out of my drive just clean and straight. And I'm like, you know what? Let's try and put some power behind it. And I kept fucking up, slicing. So honestly, the best way for me is just focus on form, get off the tee, play it to the green, and par. I mean, and honestly, like, I don't have to worry about fucking driving the thing 300 yards, 200 yards. I mean, it's not like I'm playing, 500-yard courses. I mean, they're like 250, 300 yards. So yeah, let's go ahead and finish the last probably 15 minutes. Knowing me, guys, I talk a lot. It'll probably be 30 minutes. But let's talk about building trade plans. All right? So I want you guys to get your piece of paper. I want you guys to get a pen. And I want you guys to write this down. How to build a proper trade plan. Okay? So go ahead and start there with a piece of paper. I'll give you guys a second to get that, get a pen, and start with the title of How to Build a Trade Plan. All right? I'm going to do this with you guys. I'm going to do it with you. I just fucked that up. All right? So, number one, we're going to focus on what I call the 3 A's. Right? So when building a trade plan, I want you guys thinking the 3 A's. The 3 A's. The 3 A's, like, what are you talking about? What are the 3 A's? Well, I'm going to break it down. The 3 A's are analyze, assess, and accept. You have to do those 3 things as you're building a trade plan. You have to analyze the chart, right? So again, if you're looking to take a trade on, say, BBIG, right? You first start by analyzing the stock, analyzing the technicals, right? It all starts there. Like, all right, I know that, we were looking at $6 being good support, right? Like, I was watching $6 support, yada, yada, yada. I like BBIG. It opens. All right, it hits $5.50. But I still have that $6 level drawn up because that $6 level is a level that I've identified on the daily chart, right? So I'm analyzing the chart right now, right? I see $6 resistance, 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 gapping up, pulling back to that $6 level. So at the start of the day, I'm already looking at $6 being a possible level that the stock holds. I'm analyzing the chart, right? And as the stock continues to move, I can continue analyzing it little by little by little. Okay, drop below 6, hit $5.50, not a fan. Regain $6, and we see some market structure form above 6. I would think about getting a trade there, right? You're analyzing. That's all you're doing. You're analyzing it, right? Okay, stock got above 6. If we start to see some market structure, I want to go long, all right? And at this point in time, you're like, look at that. That could be market structure. It regained 6, popped all the way to 650, pulled back, right? Bounced off 6. It's starting to come back down to 6, so you're analyzing, right? You've been analyzing the whole time. Analyze, analyze, analyze. All right, cool. You've analyzed BBIG. You like the idea of getting long at 6 with tight stops and high reward. Why is it a tight stop? Because you want to see market structure above 6. You're waiting for market structure to set in above $6. And if the stock cracks back down below support, you get out because it's probably going to move even lower. So with that being said, you're like, all right, I want to get a $6 entry. And I want to put my stop maybe at like $5.80. So I'm going to go ahead and say, you know what? My stop is going to be right there around $5.80. So now what are you doing, right? Right now, you're more of assessing. You're starting to get into that assessment. And that's A number 2 is assess. So remember the 3 A's is analyze, number 1, assess, and accept. So you're still analyzing, but you're more working into the assessment, right? You're assessing where your entry is going to be. You're assessing where your stop loss is going to be. You're assessing where your target is going to be, right? So green line, entry. Red line, stop loss. Green line, profit target. Let's make the profit target orange, right? So right now you've analyzed the stock. You see support at 6. You see it regaining 6. It's starting to possibly put in some market structure above 6. So you're analyzing. Now you're starting to assess everything, right? You're assessing your entry. You're assessing where your stop would be if you get stopped out on the trade. You're assessing where you're looking to take profit, right? And now we start building the plan. All right. So if I get an entry at $6, right? So, okay, if I get an entry at $6 here, right? And I'm risking $5.80. That is 20 cents a share. I'm risking 20 cents a share. You have to go ahead and say, how much are you willing to lose on the trade? Assess how much you're willing to lose as far as a dollar amount. Not just assess the entry, the stop loss, and the target, but also assess how much you're okay with risking on this trade. So again, if you're like, you know what, I have a $10,000 account. All right, I have a $10,000 account, and I can't risk more than 2 to 3% on my account on a single trade. So that means I can't risk more than 2 to 300 bucks. So you tell you what, I'll risk 200 bucks on BBIG. Perfect. I'm okay with risking $200. All right, cool. So I know the dollar amount that I'm okay with losing on this trade to see if I'm right. All right. So you're risking 20 cents a share. You're okay with losing $200 on the trade to see if you're right. How many shares can you buy on BBIG? Right, so how many shares could you buy on BBIG getting stopped out at 0.20 cents, 20 cents, right, to lose no more than $200? It's just math at the end of the day. How many shares are you going to be able to buy a BBIG at $6, and if you get stopped out at $5.80, to not exceed a $200 stop loss? How many shares would you be able to buy on this trade to not exceed that $200 amount? I'm not giving you the answers either. I usually give you the answers in the morning because we're on a time crunch. Right now, I could fucking sit here until 9 o'clock. I can sit here till 9. I'm not giving you the answer. If you want me to repeat the question, let me know. Loopy guy, what's up? Loopy. Daniel Finance in chat, what time do you start evening stream? So here's my schedule moving forward, guys. This Friday, we will be doing another evening session right around 6 to 6:30. Next week, we'll be doing one on Tuesday and Wednesday. And then so it rotates, right? So this week was supposed to be Tuesday, Wednesday, guys. It was supposed to be Tuesday, Wednesday, but it's not. So again, we normally rotate. So this week we do Tuesday, Friday. Next week we do Tuesday, Wednesday. Then it goes back to Tuesday, Friday, Tuesday, Wednesday, Tuesday, Friday, Tuesday, Wednesday. So again, it's just going to rotate every single week. So the week that we're currently in is a Tuesday, Friday session. Next week, it'll be a Tuesday, Wednesday. The week after, Tuesday, Friday, so on and so forth, and we'll repeat that cycle, and we'll fine-tune the times that we go live. So again, if a lot of people show up at 7 o'clock instead of 6, we'll do them from 7 to 8. A lot of people want to do them from 6 to 7, we'll do them from 6 to 7, or however long that they last. There you go. Tyler, 1,000 shares, right? 1,000 shares, because it's math. So 1,000 shares, right, times 0.20. That's 200. So that means if you bought 1,000 shares at $6, right, and you got stopped out at $5.80, you're going to lose $200. So guess what you just did? You assessed not only your entry, not only where your stop loss is going to be and your target, you've assessed how many shares you can buy to not exceed that $200 amount. And then here's the last piece. Well, actually, there's two more. All right, so you just identified that you're going to risk 20 cents, right? You can only buy 1,000 shares to not exceed that 200 bucks. Now you have to ask yourself, is this a 2-to-1 setup? So if I'm risking 20 cents, can I make 40 cents, right? Is it a 3-to-1 setup? If I'm risking 20 cents, can I make 60 cents? Is it a 4-to-1 setup? Am I risking 20 cents to make 80 cents? You have to make sure you're only trading 2-to-1 setups minimum. If it's a 1-to-1 setup or it's less than a 1-to-1, don't take the trade, right? Because at the end of the day, guys, as a newer trader, you may come to find out that you have an average win rate of 50%. So that means for every 2 trades you take, you're going to lose on one and you're going to be green on one. Imagine trading 1-to-1 setups. So imagine trading 1-to-1 setups with a 50% win rate. You're breaking even, right? Because one green trade, you make 200 bucks. The red trade, you lose 200 bucks, right? Because you're trading 1-to-1s. You're breaking even. But by implementing a 2-to-1 rule, only taking trades that have opportunity to be a 2-to-1, 3-to-1, 4-to-1, the more the better. You can have a 50% win rate and still be profitable in the stock market, right? You can still be profitable with a 50% win rate. You will break even at a 33% win rate by always trading 2-to-1 setups. So not only are you looking at where your stop's going to be, where your entry's going to be, and your target, not only are you assessing how many shares you can take, not only are you determining what you're okay with losing on the trade, a dollar amount, say $200, you're also trying to determine, does this have potential to get me 2 times the risk in reward, right? So if I'm risking 20 cents, I want to be able to make 40 cents. So let's go ahead and see. We know that that prior high was right there around $6.48. So if I bought at 6 and it popped up to $6.40, I would be at a 2-to-1 risk reward, right? I may consider locking in some profits. and then bringing my stop loss up to break even. That's another topic, right? How to manage your trade, how to scale out of trades, when to bring stop losses up, when to trail your stop loss. But right off the bat, you got to look at it and say, okay, I'm buying at 6, I'm risking 20 cents. Can I make 40 cents? Well, yeah, that would be a retest of that prior high. That's doable. Perfect. It's a 2-to-1 setup. Fantastic, right? And then last but not least, once you've analyzed the chart, you've assessed your entry, you've assessed your stop loss, you've assessed your target, you've determined how much you're okay with losing on the trade. You said $200. That's in line with your account. You figured out how many shares you could buy to not exceed that $200 loss. You've identified it's a 2-to-1 setup, right? The last thing you have to do is accept the risk. This is something that a lot of traders can't do, guys. This is a lot of things traders can't do. They cannot accept the fact that they may lose money on the trade. They're too emotional. They want to be right 100% of the time. I'm going to be blunt with you guys. I'm going to be real with you guys. No one's right 100% of the time. If they tell you they're right 100% of the time, they're full of shit. They tell you that they're right 90% of the time, I'm still leaning towards full of shit. 80% of the time, 85% of the time, okay, right? We have traders in chat that have 80 to 85% win rates. But for the most part, the average win rate for successful day traders, guess, what do you think the average win rate is for professional, successful day traders? Whether you're doing it on your own, whether you're working for a hedge fund or an institution, or working for someone on Wall Street, day trading the firm's capital, guess what the average win rate is across all professional, successful traders. Daniel says 60%. 66%. It's actually less than that, guys. Believe it or not, it's actually in the 50s, right? It's actually in the 50s. It's like 55, 56%, right? So that means for every 2 trades they take, they're losing on one and they're making money on the other. How do they stay profitable? How do they make a shit ton of money? They're identifying 2-to-1, 3-to-1, 4-to-1, 5-to-1 setups. So if they get stopped out, that's fine. Statistically, they'll be right 50% of the time. So they'll make 4-to-1, 5-to-1, 6-to-1. They'll make so much profit that loss doesn't even make a dent in their profit. It's insane, right? So how do you have a 50% win rate and still make consistent profits? It's about managing your risk, identifying 2-to-1 setups or above. The higher, the better, right? Building trade plans, accepting your loss. So again, I kind of got off topic there. So again, the last thing that you have to do is accept your risk. You have to accept it, right? Because you are going to lose every now and then. That's the reality of day trading. There are so many unforeseen variables in the stock market. You will take losses. You may go on a month green streak and then have a month red streak and then have a 2-week green streak and then go red for a week and then back green for 6 weeks, right? It's going to be one big average. There are so many unforeseen variables in the stock market. You cannot predict it 100% of the time. You cannot be right 100% of the time. So how do you stay in the game? By managing your risk, identifying 2-to-1 setups, and building proper trade plans so you know you're not taking on too much loss, right? So again, you're accepting. Am I okay with really losing $200 on this trade, Josh? Yes, I am. All right, cool. Guess what? You're going to be able to take that trade without hesitation. You hit 6, you're in. It hits 580, you're out, right? It hits target, you're making profit. You're going to be able to take that trade without hesitation. You're not going to hesitate. When it hits 6 and you like it, you're going to buy it, right? You're not going to be like, I don't know. And then you see it pop from 6 to 630 and then you jump in because you hesitated. It's not going to happen. You're not going to hesitate. You're going to take that trade with confidence, all right? You're also not going to trade that trade emotionally. If it goes down to 580, you're not going to be like, I'm down $100. I'm just going to sell it. I'm going to sell it. And then see it pop back above 6 and rip to your target, right? You're not going to be emotional. You're going to be able to trade without hesitation. You're going to be able to trade without emotions. You're going to be able to trade with confidence, right? By having everything in front of you. Nothing unforeseen is going to happen. Oh, I mean, to a certain extent, right? Because again, the stock could get halted, pending news, and then gap down. SCSN, right? Anything could happen. At the end of the day, anything could happen. But at the end of the day, you already know what you're getting yourself involved with. You know what the outcome's going to be. You know that if you hit 580, you get stopped out, you lose $200. That wasn't, wow, that was way too much. Holy crap, I only want to lose $50, but I lost $200. You already know you're going to lose $200 coming into the trade, right? You already know what's going to happen. You know about how much money you're going to lose and about how much money you're going to make. You're going to be confident. You're going to be comfortable, right? You're going to take that trade without hesitation and you're going to trade it and manage it without emotion, right? That's getting into the mindset of a professional trader. That's what I do every single day. I can build plans like this fast. 5-10 seconds. 5-10 seconds. 5-10 seconds. I mean, I build these plans in my head on the spot because I've done it so many times. It's repetition, right? So again, it may take you time in the beginning to do this as a brand new trader. It may take you a minute, 2 minutes, 3 minutes to actually go through these steps, but the more you do it, repetition every single day, you're going to be able to do it as fast as me. 5 to 10 seconds. 5 to 10 seconds. I can look at a stock, see where my stop loss is, see where a target is. I already know what the dollar amount is per share loss. I can already determine how many shares I'm going to get. I accept it. I take the trade, right? Just like that. If I know like, okay, $1,000 is too much of a loss. I want to lose 500 bucks. I cut my shares in half. Boom, boom, enter, right? I can do it quick on the spot, and I trade without emotion, and I trade without hesitation. So you have to accept your loss. You have to accept the fact that you may lose $200. And here's the outcome of that. One of two things. Either A, you accept it, you're okay with losing 200 bucks, you take the trade. You're in. Other thing, you're like, fuck, $200 is way too much money to lose. I don't want to lose 200 bucks. I can't stomach a $200 loss. Can I stomach a loss? Yeah, but not 200 bucks. How much? Maybe $100. Okay, guess what you do? You scale back on your size, right? So before you executed the trade, you're able to get that last breath, that last second to really say, am I really okay with losing 200 bucks? If so, yes, you're in 1,000 shares. If the answer is no, I'm not okay, I only want to lose 100 bucks, you will cut your size in half and take 500 shares. Because at 500 shares, at a 20-cent stop, you'll lose $100. Okay? So it gives you that final chance to commit to the trade, to commit that you're okay with losing that money. And once you've done the 3 A's, you analyze everything, you assess, you accept, right? $100 loss on 500 shares. Exactly, Tyler. You're going to be able to trade without hesitation and emotion, right? So let's say, again, you did everything on BBIG. Again, you were looking for the regain of 6. You're looking for a double bottom, and you just took all that time, all right? It took you 2 minutes. Let's say it took you 1 minute, 2 minutes, right? You're right here now. You're right there. By the time you saw that red candle coming back down to 6, 1, 2, 3 minutes, you analyzed everything, you assessed, you accepted, you already know you're good with 1,000 shares, you're going to lose 200 bucks, you're going to make your entry, right? You're going to make your entry. There's $6. You just got filled. There's 640, you take profit. You bring your stop to break even, right? When I hit 2-to-1 targets, guys, when I hit a 2-to-1 target, I'm risking 20 cents to make 40 cents. When I hit a 2-to-1, I'll take half of my position, I'll bring my stop loss up. So at that point in time, I would have sold 500 shares for a 40-cent profit. I would have locked in $200. My stop loss now is going from 580 to break even at $6. So now my stop loss is break even. So I'm in a risk-free trade. Worst case scenario, I get stopped out on the remainder 500 shares. I still lock in $200. It rips to 686, my next target. Guess what? I take 100% of those profits. I make $400 to $500 on the trade, right? So again, I take profit, bring stops to break even, and ride the rest and scale the rest as long as I can to continue locking in profit. So again, at that point in time, you just hit 2-to-1. You go ahead and bring your stop loss up to break even, and you're going to look to see if you can get to your final target right up close to the open, right around 686, right? That was one of our big targets. But at least you're locking in half, you're locking in something, you're getting paid, and if you get stopped out, you're getting stopped out at break even, you're still walking away profitable. All right, let's see how this trade would have played out. You got very damn close to 680. Let's see how it played out. Your stop loss is at $6, guys. You still have 500 shares on the table. Boom, you hit target. You take a little bit more. Boom, it's ripping, it's running. You're taking more. Boom, it's ripping, running. You still have 100 shares on the table. Look at that. So that's where it pays to build your plan, to analyze, to assess, to accept your loss. You take that trade without emotion. You take the trade without hesitation, right? You could have taken half your position, brought stop to break even, and if you didn't close out the rest, you would have never been stopped out. And this stock would have ended up going from $6 all the way to $8.50. And that's how you build proper trade plans. Do I always take 50% at my targets? Not always. Sometimes I take 25%. Sometimes I lock it all in completely. Sometimes I take 50%. It really depends on the stock and how confident I am that the stock can continue to rip to the upside. Right? So sometimes I take it all. In a choppy market, I'll take 100%. If a kind of a lukewarm market, still pretty nice, I'll take 50%, bring stops to break even. In a hot market, I'll take like a quarter of my position and continue to scale in quarters and fourths. Tyler, excellent. Thank you. Absolutely. Was this of value, guys? Did you guys take something away from this? Right? Does this make sense on how to actually build proper trade plans? This is what I do. This is how I do it. This is what the professionals do, right? I came up with the 3 A's because I thought it was easy to say the 3 A's and really breaking it down. Analyze, assess, accept. Analyze the chart, assess everything. Assess your entry, assess your stop, assess your target, assess that it's a 2-to-1, 3-to-1, 4-to-1 setup. Assess how many shares you can buy to not exceed a certain dollar amount loss. And then finally, accept it. And if you can accept it, you're going to be a phenomenal trader, guys. You're going to be able to take these trades without hesitation, with confidence, with just pure, just fucking technicals. You're not going to have anything else blocking your vision, your field of vision. You're going to be just focused on the chart. You don't care what your P&L is. You don't care about anything. You're focused on the chart, right? You're trading the chart. You're not trading your P&L box. So again, you know, the 3 A's, analyze, assess, accept. I hope you guys wrote this down. I am not recording this right now. I'm not recording this. But again, that's how you build proper trade plans, breaking it down to the 3 A's, what they mean, and what, you know, how to apply the 3 A's. And then that's how you build a trade plan, guys, each and every time. So again, my number one rule is to do this every single time before I take any trade. I will not just type in 2,000 shares and click buy without understanding where my stop loss is on the chart. So I don't prematurely get stopped out. To make sure that I'm not getting into a trade to where I have resistance right here and support all the way down here to where I don't have that much room to the upside. If anything, I have more room to the downside where it's a bad setup. You know, it's less than a 2-to-1. So again, I'm doing this to make sure that it is the good trade. It's the best trade. To make sure that if I get in, that it's a good setup that can provide me with, you know, good returns. Brian, yeah, we're on YouTube, so I know you guys on TikTok right now. You're like, does this guy ever like look at his live stream? We're actually on YouTube right now, guys. So we're on YouTube. So I'm looking at the comments. I'm looking at my screen. So that's why. But you can join us on YouTube next time. We go live again on Friday, guys. So Friday, and we're going to do this consistently. I want to do this at least a couple days a week. Find the times that work best for you guys, right? Find the times that work best and do stuff like this, right? Like I had no idea we were going to do a trade plan lesson today. But Tyler was like, hey, what's your number one rule? I think it was Tyler that said, what's your number one rule? Yeah, what's your number one rule? Build plans. Guess what? That's a great topic. That's a great lesson. Let's dive into it. And it's something of value to pretty much everybody, right? You're going to be able to take this. You're going to be able to apply it. You've learned something today. Apply what you've learned. And I promise you'll see better success in the market. I promise. If you do this each and every time, you're going to, you know, cancel out the noise, right? You're going to eliminate the noise, the bad trades. And you're only going to be focused on the best of the best trades with the best of the best setups that have the best of the best opportunity. 3-to-1, 4-to-1, 5-to-1 setups. Ron, absolutely. That's what I'm here for, guys, right? I don't have to be here. I don't have to do this. I can be out there spending time with my wife and my daughter, right? I don't have to be here at 7:20 doing this, but I like seeing people successful. Like that is my driving passion on why I do what I do, because I love seeing people become successful. I hated being a new trader. I hated being a new trader. I sucked. And when I started becoming good, I was like, how could I have been a better trader a lot faster? And I figured everything out, what I could have done differently as a brand new trader to be successful a lot faster. I'm like, you know what? Let me share this with everybody. Let me share this with the trading world, because a lot of traders fail. For every 100 traders that come into the market, 90 to 95 of those, they fail. The other 5 are successful. How do we change that statistic? How do we create, for every 100 people, 80 successful traders, 90 successful traders? How do we change that, you know, that success or that percentage of traders fail from 95 to 5, from 90 to 10? How do we do that? Well, again, it's guidance. Someone that's been here, someone that's gone through the trial and error, someone that's learned the hard way, being able to guide you right in the right direction. And again, I do this because I absolutely love seeing you guys be successful. Like, what fires me up more than anything? What fires me up more than making my own profits? What fires me up more than anything is seeing my team make profits, seeing people on YouTube on our free stream make profits. Like Gonzo. Gonzo's not here right now. Gonzo, this man's been locked. He's for out of the last 5 option alerts we made, he's 4 for 5. This dude's 1,000, $2,000, $3,000. I think the guy's up like $5,000 in the last week off our option calls. But he's learning at the same time. He's not just making money, right, trading these alerts, but he's also learning why we're trading the stock, why we traded it, where the stop loss was, where our target was. So not only is he making money, he's also learning why we're trading these stocks in the first place. So eventually, Gonzo is going to be able to do this self-sufficiently, right? He's going to be able to do it self-sufficiently. NASCAR All Out. Isn't day trading a zero-sum game? For every winner, there is a loser. You can't have a 80% win rate. You can. Casey in chat has an 85% win rate. I maintain a 75 to 80% win rate. So even if, let's say that was real and that was true, which it's not, because I see firsthand in real life traders that have 70, 80, 85% win rates. So I know that that's not a fact. It may be something that a lot of traders, but again, I know that's not a fact because I personally have more than a 50% win rate. So if it was a zero-sum game, well, that would be if you have an 80% win rate, you would have 80% winning trades, right? So if your win rate was 80%, that means for every 10 trades you take, right, you're making money on 8 and you're losing on 2. So you can't have 80% winning trades, so you can. So for every 10 trades you take, right, if you have an 80% win rate, that means you're winning on 80% of your trades. And that is possible because I do it, traders in chat do it, some of the best traders out there, right? I know like Sean Deckmar. This dude, for every 10 trades he takes, this dude, he loses on 1 or 2, right? He loses on 1 or 2 trades. He's got an 80 to 85% win rate. Casey in chat has an 80 to 85% win rate. So meaning that he wins on 80% of his trades. For every 10 trades that Casey takes, he's winning on 8. He's winning on 8. But let's say it was a zero-sum game. Let's say for every winner, there was a loser, right? Let's say that was a fact, right? So let's say that 50%. For every winner, there's a loser. That's 50%. That's a 50% win rate. That means for every 2 trades you take, you lose on 1 and you make money on the other. How do you still become profitable? By identifying high risk reward setups. So high reward to low risk. What is that? 2-to-1 setups, 3-to-1 setups, 4-to-1 setups, right? To where you have the potential to make 4 times the risk. So if you took every single trade the same way every single time, 4-to-1 setups, that's it, 4-to-1 setups across the board, and you had a 1-sum game or a 0-sum game, right? You're 50-50. On your loser, you're going to lose, but on your winner, you're going to make 4 times your loss, right? If you have 4-to-1 setups. If you have a 3-to-1 setup rule and you're only trading stocks that provide you with 3-to-1 setups, that means you're going to lose on 1, but you're going to make 3 times your loss on the next trade. So you're going to still have phenomenal profits, and you're going to be able to do that consistently day in, day out and still stay in the game. But the big piece is risk management. If you build a plan and you say your stop's here, that's where your stop is. The second you start moving your stop farther away or not honoring your stop loss is when you start really just breaking even because you're not honoring it, right? You have a stop loss, you have a target. Stop loss, target. 2-to-1 setup, you take the trade, right? And if it was 50-50, you still actually walk away profitable at the end of the day. Cody, yeah, I am Cody. What up? Hey, you reading these here? I am Cody. What's going on? Hey, Rebel Trucker, what's up? Hey, Cody, thank you. He said, tag me on a fake account on TikTok that's claiming to be you. One thing I want to talk to you guys about as well is there's a lot of that going around. Not just with me, but a lot of other creators on TikTok. A lot of people that I follow, I've seen some comments and posts about all the spam accounts, all the fake accounts. And so someone on TikTok today was like, you stole $5,000 from me. And I thought it was a troll. And I was just like, okay, whatever. I just completely disregarded it. I didn't pay any attention to it, right? And then he was like, you DM'd me and stole $7,600, $7,800. I'm suing you. And I'm like, hold on. I DM'd you. What are you talking about? Yeah, you DM'd me. I'm like, I don't DM people. So if you're watching this right now and you're new to the stream, I will never DM you. Ever. Ever. If you DM me, I'll respond to you, but I'm not going to initiate the conversation. I'm not going to DM you, number one. So if you ever get a DM from Alpha Day Trading, it's not me. Go report the account and block it, right? I don't know if it was a troll or if he was being serious. If it was a troll, he's shit. Let's call it, yeah, he's a piece of shit. But if that was real, I feel bad for him, right? Because someone was able to fucking screw somebody over, which is sad, So again, at the end of the day, I will never DM you guys, ever. If you DM me, I will respond to you. And always do your due diligence. If it's not me and it's someone else that you follow and they DM you, just do your due diligence and go to that page. Check the following. Check the content, right? Check the handle. Is it underscore Alpha Day Trading? Is it Alpha Day Trading underscore exclamation point? If so, it's fake. I'm just Alpha Day Trading. I have 40,000 followers. I have over 1,000 videos. So again, this one had 735 followers with probably no videos. You already know it's a fake account. So don't put yourself in a position to hurt yourself. I will never DM you. I will never ask you for money. I will never say I will trade your account. I will never do that, guys. All right, ever. So if you ever come across that, report the shit out of it and block the shit out of it. All right. Do you do this for a living? I absolutely do this for a living. This is my full-time job, guys. I'm a full-time day trader. I've been full-time day trading for about 2 years now. I've been day trading for 7, but full-time for going into my 3rd year right now. He is jacking your video. I don't get it, guys. Instagram, fake accounts on Instagram, fake accounts on Twitter. People hit me up all the time saying, hey, I don't think this is you. I'm like, yeah, it's definitely not me. Report it. So if you guys can do me a favor, if you ever come across a fake account for Alpha Day Trading, just report it saying that they're pretending to be somebody and they're pretending to be me, right? And the more reports that you get, the faster they take those accounts down. But at the end of the day, guys, that's the world we live in. There's going to be so many people out there trying to take advantage of people, but you have to be smart and use your head, right? No one's going to, scam artists ask you for money. Scam artists say, I'll build your account for you, right? That's what they're going to do. I will never, ever say I want your money. I will never, ever say that I want to trade your account or I will trade your account. I will never, ever DM you. I will never DM you directly. If you DM me, I'll write you back. I'll respond. Honestly, NASCAR, I like the mindset. Hey, can I find a 400 to 1 risk reward setup? Honestly, at the end of the day, those are one in a few. Those are rare, right? To be able to buy a stock and say risk $1 to make $400, right? Or to buy a stock to risk 4 cents to make $4, right? That is that is 1 in a million, right? You may come across one of those at some point in your trading career, but it's nothing you're going to see consistently in the market. On average, I see 3 to 1 setups, right? On average, I identify more consistently 3 to 1 setups, right? Sometimes they're 2 to 1, sometimes they're 4 to 1, but on average, 3 to 1 setups. Every now and then, I'll spot a 5 to 1, 6 to 1, 7 to 1. I've had a 12 to 1 setup before. I've identified a 12 to 1 setup, and I was a winner on that one. But again, that's the most I've ever seen as far as a proper trade with, a 12 to 1 setup. So yes, is there any extremely high risk reward setups? 1 in a million. You may see 1 in your life, in your trading career. It's not a thing that you're going to see consistently. But honestly, at a 400 to 1, if you find 1 a year, you're probably doing good, aren't you? If you find 1 400 to 1 setup a year and you nail it, I think you're doing good, right? You don't even have to trade the rest of the year. 1 trade, you're done. How much capital do you think a good trader needs to use as full-time income? So how much capital do you think a good trader needs to use to make full-time income? So as long as you're over PDT, you have no restrictions on day trading. So you're not limited to settled cash. You're not limited to day trade. So honestly, as long as you have enough in your account to get over that PDT rule, you can be extremely successful, 100%. You don't even have to use 25, 30, 40 grand a trade. You can invest 5 grand and it's a 10% winner, right? And make $500, right? So as long as you don't have to have $1 million, 500 grand, 100 grand. As long as you have enough over the PDT and you have consistency and you're disciplined and you have a proven track record of success, there's no limit on how many trades you can take. So honestly, as long as you're over the PDT, that's all it takes to make a good living from this. But one thing that I realized before we jump off here, guys, one thing that I did wrong as a new trader when I quit my job, my full-time job to pursue this full-time, is I had money in my account, but I had no money in the bank. I had no money in savings. I had no money to pay my bills. I relied on that trading account as my income. So guess what I did every single day? I come to the market, I have to trade. Where's the trade at? Where's it at? I got to find it. I wasn't trading good setups. I was just trading to trade to make money. That was the worst mindset. Trading to make money. Bad mindset. Trade to make the best trades, and the money will follow. You got to shift the mindset. You're not here to trade to make money. You're here to trade to make the best trades, and by doing so, the money is going to follow, right? So the one thing that I did wrong as a brand new trader trying to take this on full time is I didn't have a safety net. If I would have had 6 months to a year's worth of income set aside, I would have came into the market with that mindset of, I don't have to trade this week. I don't have to trade next month. I don't have to trade for 2 months. Technically speaking, I don't have to because I still have my bills paid. I will only trade if I find the best of the best opportunities. So by having a safety net and my bills paid in advance, I was able to come into the market with the mindset of, I'm here to take the best trades. I've gone 2 weeks before without trading, guys. I've gone 2 weeks sitting on the sidelines watching. I didn't care because I'm not losing money. I'm holding on to my money. And then the market heats back up. I make my monthly goal in 2 weeks, and I didn't lose money the 2 weeks that the market was slow, right? So again, you got to have the shift in mindset. You have to come into the market with the mindset of, I'm here to take the best trades and the money will follow. And you need to have a safety net so you're not emotionally attached and reliant upon your trading account for income. Because the second you become emotionally attached to your account, the second that you are reliant upon your trading to generate your monthly income is the second you start making bad mistakes and you start losing a lot of money. Joel, did I go to college to day trade? Absolutely not. I went to college for a week. You guys want to know why I went to college for a week at 18 years old? Because I realized if I went to college, that I would get like $3,000 back off the student loan. And so I was like, I just want $3,000. I was young, I was dumb, I was stupid, right? Barely graduated high school. I said, if I go to college and I enroll and I go through all the steps, I'll get a student loan. And when all the fees come out for books and this and that, I'll still have a surplus of like $2,500. I can go buy a computer to game on. What I do, I enrolled for college. I went for a week. I dropped out a week later. I took my $2,000 and I ran. I didn't go to college. I'm not a book smart person. I'm not a sit down at a desk type of person. I'm a hands-on person. I want to get out there and I want to learn hands-on. Trial and error, making mistakes. That's all me. And if I wanted to be a lawyer or a doctor, yeah, I would have went to college. I need a degree to be a lawyer, a doctor, a surgeon, whatever the case is. But I had no idea what I wanted to do. I had no idea. I was going to school for business management. That's a waste of money. Let's be honest. Business management is a waste of money. How about you go and get into the workforce at 18? You spend 4 years working hard. You learn business management. You start getting promoted, and you're not out 50, 60 grand for a piece of paper that really doesn't do anything nowadays for business management, right? My wife went to college for sports management, parks and rec. I don't know what the degree is, but again, it's like, sports management, work in the sports industry. She gets her degree, $60,000 in debt. We moved to Florida, and you got the Phillies, the Threshers, you got, the Lightning, you got everything around here, right? She could not get a fucking job to save her life. The one job she got was entry level minimum wage, and she's got a fucking degree, 4-year degree. And she couldn't get a job in the field. And they wanted her to start at entry level. What's the fucking point? I can just start entry level at 18 and be somewhere by the time I'm 22 graduating, college. Now, don't get me wrong, going to college for the experience. I wish I would have went for the experience, but what's the experience? Getting trashed and shit-faced and waking up hungover and having to go to class at 9 a.m.? Like, I already did that. I just had to go to work the next day. I already got shit-faced and I was hungover, but I had to go to work the next day to make money, not go to work to learn. So again, no, I didn't go to college. I did not go to college to learn how to day trade. You don't need a college degree. You just need someone that can guide you in the right direction. It may not be me. I may not be the best person to guide you because everybody's different. We may not click at the end of the day, but there are really good traders out here. There are really good traders out there. Ashton Nolan, Connor with Options Trading Daily, right? Kenneth with Trade Invest Simplify. Sean Dekmar. Sean Dekmar does pretty much what we do, right? But everybody clicks with a certain mentor. Some people click with them. They don't click with me. Some people click with me and not with them. But again, you have to be able to click with the person that's teaching you and guiding you. But again, at the end of the day, you got to find someone that you mesh well with and someone that really has your best interest at heart and wants to help you succeed. And if you find the person that has your best interest in mind, they want to see you succeed, you guys mesh well, they're going to be able to guide you in the right direction and they're going to guide you to success at the end of the day. They don't have your best interest in mind. They're just in it for the money and they just look at you as a number. you're not really going to get that guided experience and that success that you really want. So at the end of the day, you got to find someone that does it for the right reasons. Again, the people that I just named off, they do it for the right reasons. These are the most humble, genuine, amazing people out there in the trading community. That's why I support them. That's why I follow them. That's why I talk about them, right? A lot of other, people in the trading community won't talk about a competitor because they're scared of losing business. If you don't mesh well with me, go check out one of their groups. Ashton, he swing trades. Go check out Sean Deckmar. He day trades penny stocks on like 20,000 shares. He makes stupid money. But I'm good at what I do, and I'm good at guiding new traders to success. Sean's good at working with traders that are intermediate that just need a push into the success, right? They already know what they're doing. They just need a new technique and a new strategy. That's what he's good at. But he's got your best interest at heart. He really cares about his team and his traders, and he wants to see success. He doesn't have time for bullshit. Same thing with me. I don't have time for bullshit. I'm here to steer you in the right direction towards success. And at the end of the day, I work really well with brand new traders that need that foundation of education to grow upon. I agree, Ranger. I believe with experience, you can rate different setups with quality. Better setups are worth risking more. I can agree with that to a certain extent. There are times that I'll jump into a trade that I'm so confident in because I see the quality of the setup and I am experienced to where I'll jump in the trade, not looking for a lot of profit. I'll risk a lot, but I'm so convinced and so convicted that this is a quality grade A setup that I have really good probabilities of being right every now and then. But since we're focused on the small account challenge and focused on building up new traders, I tend to go back to the basics and focus on the basics because the basics are the foundation and you grow upon that and you start tweaking things and crafting your edge in the market. So guys, we've been going live. We've been going hard for about an hour straight. I haven't had anything to eat today. 0. So this was a fun session. We had 21 viewers, 13 likes, 20 viewers here on TikTok. So awesome. So this is something that we'll do consistently every single week, at least 2 times a week. This week it is Tuesday and Friday, right? Next week it's going to be Tuesday, Wednesday, and then it rotates. So one week it's Tuesday, Friday, then Tuesday, Wednesday, Tuesday, Friday, Tuesday, Wednesday, Tuesday, Friday, Tuesday, Wednesday. And we'll probably, what do you guys think? What's a good time for you guys? For those of you that are in the stream right now, what's a good time for you? We'll probably do these for about an hour a day. So I can go from 6 to 7 or from 6:30 to 7:30 or 7 to 8. But we won't run them past 8 o'clock. I'm a little bit of everything. I'm a 80% day trader. I do swing trade occasionally. And I definitely long-term invest in crypto, in equities. So I'm a little bit of everything. PM, Eastern Standard Time, by the way. PM, Eastern Standard Time. We got Ron saying 7 to 8. Frank, 7 to 8. Joe, after you eat. I need to eat. Moto, 7 to 8. Kiss my ex, 7 to 8. And this is Eastern Standard Time as well. So again, that'll give me time to eat, guys. That'll give me time to eat. So, okay, so we'll do, everybody's saying 7 to 8. So, moving forward from 7 o'clock to 8 o'clock. We may be in here at like 6:50. I'll be playing some music, right? Rolling the intro, kind of getting prepared. But we'll officially jump on the mic and start at 7 o'clock, and we'll run it until 8 o'clock. Now, last thing, guys. What are some things you guys want to talk about in these streams? It's 7 to 8. What are some things? What are some things that you guys want to hear about, learn about, talk about? Kind of so I can build my structure around these sessions to make sure that you're getting the most bang for your no buck. I mean, there's no buck, but the most bang and the most value in this hour session. Ron, scanning for good stocks. That's a great topic. Scanning for good stocks. An option session, talking about options. The watch list for the next day. Well, one thing with me, guys, is I build my watch list in the morning. So I'm in my office at 5 a.m. and my computer's up and running at 6. So I start building my watch list from 6 to 9. Because what I'm looking at with penny stocks is stocks that have fresh news. Stocks that are gapping up. Why are they gapping up, right? So I normally build my watch list in the morning. As I'm a day trader. If I was a swing trader, I'd build my watch list probably at night for the upcoming weeks and the upcoming days, right? But as a day trader, I'm building my watch list as news is coming out in the morning, as stocks are moving. I'm building it in the mornings. And we can talk about scanning for good stocks. Absolutely. So yeah, scanning for good stocks, options, the first thing to look at. We'll talk about that in part of scanning stocks. So I tell you what, Friday, guys, Friday is our next session in the evening from 7 to 8. We will talk about pre-market stock selection. How does that sound? Pre-market stock selection, basically scanning for stocks, eliminating the noise and focusing on the 3 to 5 stocks that have the best potential. Instead of having a 30 stock watch list, how to eliminate the noise and focus on 3 to 5 stocks out of the hundreds that have the best potential for the day. We'll do that. Pre-market stock selection. How much did you make today, Alfred? So today was $100 on the small account. Yesterday was $280 on the small account, and Friday was $160 on the small account. So over the last 3 trading days, I'm almost at $600 on the small account. Now, if it was my main account, dude, if I had my main account and that's what I was focused on, oh man, I would have been crushing it, because there's been so many good setups where I would have jumped in 1,000, 2,000 shares in $1,000 days. But again, I am trading my small account for the small account challenge, and that's where my focus is with newer traders inside of chat. Teaching them the ropes, getting them confident, getting them making some money on their small accounts, seeing that growth, but most importantly, learning. Jacob. So Alfred, why aren't you hitting your main account? Well, I liquidated my main account. I had a good investment opportunity present itself. And so it was win-win, because I was focusing more on my main account than my small account, and we're in our small account challenge. So I was focusing more on my big account than my small account, number one. Number two, I had a very great investment opportunity present itself to where I can still make money on the money that would be sitting in my main account, and I can still focus 100% on my small account. So that's why I'm not trading my main account. What would be the best time frame to day trade? The 1 minute, the 2, the 3, and the 5. Right? I sift through those time frames. Right? I'll start my day at a 1 minute. As we progress, I'll go to a 2 minute, a 3 minute, a 5 minute. I analyze on every time frame though. I'll analyze a 30 minute, 15 hour, day, week. I'll analyze every single time frame. But 80% of the day, I'm on a 1 minute and a 5 minute. Those are my 2 top time frames, 1 and 5. And then every now and then I'll kind of go to a 2 and a 3, and I'll just kind of see if I notice anything different on certain time frames. Because I tell you what, you could see a setup on a 5 minute that you don't see on a 1 minute. And you can see a setup on a 1 minute that you can't see on a 5 minute. So you got to be a chameleon. You have to be versatile, and you have to be able to switch between those time frames and adapt. Alfred, what was the investment opportunity? A relative of mine has been trying to get this property down here for the longest time. He's been waiting for this property. He finally got the contract. He got the deal. He bought the property. It's a shithole, right? His investor that was supposed to be the investor for the renovations fell through because it took so long to wrap up the deal in the house. He went on to pursue other investment opportunities, so his capital was tied up. So he's got this house that he got for pennies on the dollar. And he had an investor willing to invest $100,000 up to $1,000 for renovations, with the expectations to make 50% ROI when they sold the house. Again, the market down here is on fire. He got the house for pennies on the dollar. He's strapped. He paid cash for the house. So it's like, where do I get the investment to renovate? So he reached out to me. He's like, hey, I don't know if you're in the financial position to do this, but I need an investor. And based on the comps and based on the value and what he believes that, we're going to sell this home for, I would make about 50% on my investment. So if he uses the full $100,000 to renovate, which I hope he doesn't, but if he does, I can make around $50,000, and that's in 60 days. That's in 60 days, right? 30-day for reno. The housing market's hot down here. That house is going to fly off the market. It's in a great place. It's going to be brain fucking new. And again, I'm looking at 60 to 90 days to generate 50% on my investment, which is unreal. Unreal, right? But worst case scenario, and here's the reason I did it. What if the market crashes and it dumps and it's just, he's stuck with the house? He says that I will get my investment back no matter what. He will move money around. He will do whatever it takes to get my investment back. So I'm in a risk-free investment right now. It's risk-free. Worst case scenario, the housing market crashes, it's not worth anything. I get my 100 grand back. I'm protected. Best case scenario, the market stays propped up. It's hot. It's on fire. Guess what? I have the potential to make around 50% ROI in the next 60 to 90 days. So I have my money working for me in the background, right? It's working for me. Worst case, I get my 100 grand back. I wasn't going to touch the 100 grand anyway because it's sitting in my main account and I'm not trading it because I'm trading my small account. So it's really just going to sit there and stay stagnant. So at least I have it working for me with the opportunity to still make money on that cash and I still focus on my small account. So it was a fucking killer timing. Great opportunity. And I'm like, this is like the perfect way that this could happen. So it was just awesome. Ron, what is my take on the housing market? I know we're talking about random stuff right now. I got another 5 minutes, guys. Another 5 minutes. I know, that's what I'm saying. If I had my big account, BBIG played out perfectly. I would have probably grabbed 1,000 shares of that trade, and I would have been scaling out. But that could have been a $2,000-$3,000 winner, looking at it in hindsight on my main account. And that would only be if I grabbed 1,000 shares. On a $6 stock, I could have probably grabbed 2,500 shares, 3,000 shares, and been happy with that. What's my take on the housing market? Last question. What's my take on the housing market? Well, if you think of a stock, right? Think of an asset. These are assets, right? Think of a stock. Stock goes up 40%, 50%, 60%, very fast. What normally happens? Comes back down to reality. I'm not comparing the two. They're completely fucking different. They're completely different. But what goes up will come down. My house that I live in right now, I bought for $210,000. It's worth $340,000. That's unreal. That's 50%, guys. My house is up 50% in 2 years. The average return on a home is what? 7 to 9% a year on average is what it's averaged in the housing market across the US. 7 to 9% per year. That's 20% in 2 years. I'm up 50% in 2 years. I think we'll see the market pull back. I don't think it's going to crash like 08. 08 was a completely different scenario. I don't think it's going to crash, but I think it's going to come back down to reality. And I predicted the market screaming to the upside with all the demand, the market slowing down, and then the market pulling back down to reality and coming down to its mean. It's mean, right? The average. It's going to return to the average at some point. I don't know when, right? It's not an if. It is a when, but I don't know the when. But what are we starting to notice? We are starting to notice the market down here start to kind of taper, right? I was talking to a couple realtors over the weekend because I'm looking to sell my house. I'm actually in the process of signing a contract on my house to sell into this stupidity. 2 months ago, a house would go on the market. You'd have an open house. You get 10 to 20 offers, all $30,000 over ask. The house was gone. I mean, he was flipping houses like crazy. I mean, just selling. He's noticing now, open house, maybe 1 to 2 offers, right? It's not as aggressive. There's not as much demand. There's not as much craziness buying 20, 30, 40 grand over ask. It's still hot. It's not as hot. So he even said, I see it slowly tapering. He sees it slowly tapering, and he thinks within the next year and a half, we see it return to the average. And that's what I think as well. And there's a couple different reasons for that, right? I don't have time to get into that, but there's a couple, reasons why I think that we'll see the market come back down to the average. But again, it's not an if, it's a when in my opinion. And the when, I don't know. But I'm giving myself 3 years. So I'm selling my house to take the 100 grand, because I'd be stupid if I didn't. I'm up 50% in 2 years. How often do you make 50% on your house in 2 years? You never do that. It's never happened. I can't tell you the last time that's happened, right? So I'm going to take my profit. I'm going to invest that in the market over the next 2 years. We're going to rent for 2 years, let the market settle, grow the 100 grand that I made for my house plus every other thing that I have, right? Maybe I can use that 100 grand to buy another fucking rental boat. I don't know. That's a passive stream of income. So I'm looking at taking the money from the house, renting for the next 2 years, giving the market time to settle, having that 100 grand as additional liquidity and more money to actually generate more money on that $100,000 to where I'm in a much better position. I can take that 100 grand, turn it to 200 grand in the next 2-3 years. And then we're going to build a house or buy a house and renovate it when the market comes back down to the average. I bought my house in 98, brand new, 145. Now it's $500K. Yeah, that's insane. $500,000. What is that? That's 300%. That's over 300% increase on your home. That's insane. And I think it's insane to be up 50% in 2 years. I think it's straight up. Whoop, right? And now you're starting to see it taper and level. Now it could hold and just sit sideways and continue to maintain, right? But I think it's going to return down to its average. And assets typically end up coming back to the average. It's mean. The houses are markets, equities are assets. I just completely butchered the fuck out of that. I know, right? Isn't it crazy when prices shut up buying frenzy? And when prices are low, you can't give them away? Yeah, no, it's insane, right? People are emotional. It all comes down to emotions. People wanted to leave these restricted states, California, New York, and flood to Florida, safe haven, whatever. And it just creates a lot of demand, and people are emotional, and they're buying emotionally. They're not buying logically. They're using their emotions to make these decisions, not realizing that they're overpaying 40, 50%. And in the next 2 years, they're probably going to be down on their investment, right? They're going to be down on their home. They're going to be upside down on it, right? So, like I said, the market's hot right now. I'm selling into the stupidity. I invested into this investment opportunity to sell this into the stupidity. I don't think it's going to happen overnight. I don't think it's going to happen this year. But my prediction is I think, in the next probably year and a half to 2 years, the housing market in this area is back down to where it should be. It'll settle back down, right? I would say in 2 years, my house right now will be worth what it was when I bought it. That's what I think. Right now, it's up 50%. I'm going to sell into it. If I check back in a year and a half to 2 years, I'd expect this house to be a $250,000 house, not a $330,000 house. That's what I think. It's going to return to the mean. It's going to settle down, less demand, a little bit more supply, help bring those prices down a little bit. We're not even talking about forbearances ending and eviction mandatoriums, being released, and all the foreclosures that you'll probably see with the forbearances. We're not even talking about the loan remodifications, right? That they're allowing people to remodify their loan for 40 fucking years instead of 30 years. Like, it's insane, right? They're doing everything they can to prevent evictions, but at the end of the day, there's still going to be a lot of, not evictions, but foreclosures. I think there's going to be a lot of foreclosures that hit the market. Creates a lot of supply, but people are prepared to go buy those up for pennies on the dollar. I look at the big picture, guys. I look at a lot of things. Again, my mindset's like a conspiracy theory mindset, the way I look at things, but that mindset has got, me predicting a lot of things pretty much to the T. It's weird. Elon is liquefying as well. So again, we'll see. Again, I talk to a lot of people. I could be wrong. 100% wrong. My house could go up another 50% in 2 years. You don't know. I don't know. But all I know right now is I'm up 50% in 2 years. I have an opportunity to sell and make 50% on my investment in 2 years. I'm going to take it. I'm going to take that 50%. And I'm going to sit on the sidelines and wait for it to come back down, right? It's like a stock. I buy the stock, I'm up 50%, right? Could it go another 50%? Yes. Could it come down and break me even? Yes. I'm going to lock in my 50%, sit on the sidelines, wait for it to pull back, and look for another entry. The housing market. I'm looking to sell my house up 50%. I'm looking to sit on the sidelines for a year and a half. Let the market come back down, right? And be prepared to rebuy for the next leg up. So, all right, guys, have an amazing night. I know we got a little off topic here over the last 30 minutes, but I love a good conversation with you guys. So I hope you enjoyed the stream. Oh, yeah, so I'm looking at the screen and reading comments. So you've been looking at, oh shit, I'm sorry guys. You've been looking at the side of my face the whole time. What I'll do is Friday, everything will go here. Boom. So I'll bring the chat and YouTube onto this screen so you guys can see me. I'm talking to you, not talking away from you. I do apologize. I completely spaced it. That was like that. So have a good night. I hope you guys enjoyed the session. Get ready for Friday. Come in with your recommendations and your topics for lessons and everything like that. And we're going to have some fun on Friday, review our week, get prepared for the next upcoming week, talk about stocks that I'm looking at, and again, recapping the week and how we did and our profits, and dropping some value bombs and some lessons as well. Frank, Joe, Ron, Alfred, everybody over on YouTube, have a wonderful night, and I will probably see each and every one of you back here tomorrow morning, 8 o'clock a.m. on TikTok, 9 o'clock a.m. over on YouTube as we kick off our pre-market commentary session. Have a good night, traders. Have a good night, everybody. And I will see you back here bright and early tomorrow morning.